Hey there and welcome to another video. My name is Hugh, and in this video I'm going to show you the slide gap trading strategy. Now this is a trading strategy that I like to use when I see big gaps in the market. And I learned this method from Chris Laurie, so shout out to him. If you want to see my interview with him from back in the day, it's available up here. So I'm sure you're probably aware of a regular gap. That's when two consecutive candles don't touch each other and there's a gap in between them. Well, what you might not know about is the slide gap, and that's when price moves really quickly in a really short period of time. So that's a pattern that I look for because there's a tendency for price to move just as quickly in the opposite direction when it hits that price level. So before I get into the gaps themselves and how to set up the trades, let's take a look at the two things to look at before the gap. Number one is the general direction of the market. What does the momentum look like? So on this chart, if I zoom out to the 4 hour, it's a downtrend. The daily, it's also a downtrend. So on this 1 hour chart, I'm going to be looking for only short positions because the market is currently in a downtrend. Next, I'm going to look for resistance levels. And since the market's in a downtrend, I'm only going to look for resistance. If it was in an uptrend, I'll look for support. If it's going sideways, then I'll play both support and resistance. So in this example, I actually took this trade last week. And this is what I was looking at before I took the trade. So the resistance level is there, momentum is down. So all I needed to do was wait for price to get into this level here, this resistance zone, and then I look for some trades. I already had the slide gap area because as you can see, price moved sharply, and this was a really swift move. So that gave me some confidence that that was a good level to trade. And price came up into the level, bounced back down, and boom, as you can see, another slide gap area formed here. And as soon as price got into this area, it just started moving, right? And so that's what I look for with the slide gaps. Now, in terms of actually entering a trade, I will place a stop loss or a hedge above the last swing high. So a stop loss or hedge here might be a little bit too close, but if I put something up here, that's a good level to be at because it's a little bit out of the way. So there's not as high of a likelihood that I'll get stopped out or I'll have to hedge. But at the same time, it is a good reward to risk ratio if it does come down. Now that brings me to the profit target. So the profit target is going to be support lows. So I'm just looking for the next support level to target that makes sense. So in this case, I was targeting this area here. I generally like to look for the elbow on the lows, and that's the area inside your elbow. That's why I call it an elbow. Price has a tendency to stop here or turn around here generally. So this is a zone, right? It's anywhere in the elbow to the low, and that's where I'm going to look for price to stop. But if I'm being conservative, I'll generally target the top of this zone here. So as you can see, price did go into that zone, and it actually ended up going lower. I think I ended up exiting probably around here, a little bit lower because I was watching it. But that's how that trade turned out. So let's take a look at a couple more examples. All right, so very similar thing here, right? In the British pound US dollar. Look at the daily chart. Price is moving sidewards. So I'm willing to play both sides. There was a huge run up here. A very similar pattern to the Euro US dollar. The resistance was up there. Price fell, and as soon as it hit this gap zone, it just fell like a rock. But since price is moving sideways in this case, I am willing to play both sides. So this could have been a good gap trade here. Hits support right there. Price comes right back up and actually exceeds it. So that's another example of a couple of slide gaps that could have been played from both directions. And finally, here's an example on the CAD Swiss. This is the 1 hour chart. If I zoom out to the daily, price is currently in a downtrend. Let's get rid of those drawings. Okay, price is currently in a downtrend, so looking for shorts. So this would have been a fantastic short right here, right? Price comes up and hits resistance right there. Huge pin bar at the top, and then price just falls off the cliff. I probably would have targeted something probably around here. Again, looking for that elbow formation, or possibly even here with these previous highs. But most likely I would have targeted right there. Stop loss or hedge would have gone above here. So in this example, would have been a potential 8.7 reward to risk ratio, which is fantastic. So as you can see, targeting these gap areas can be very beneficial because price moves very quickly and it can get to the profit target very quickly. So like with all my videos, this is educational information only. Be sure to watch this video a couple times and backtest your strategy before you ever use it in a live account. It's really important that you get a feel for momentum and then picking the right support or resistance level and then entering the trade. So that takes some practice. Be sure to test it out. Be sure to use backtesting software to do that. And if you practice enough, you'll start to get the hang of it. All right, if you like that video, give it a thumbs up, subscribe and hit the bell if you want to get more videos like this. And thanks for watching.